Hey, it's the first day of the Trump administration. I'm John Zidar. This is On Top and Hot, and it is Tuesday. It's January 21st. Now, you know what I like to do? I like to talk about hot penny stocks. On the weekends, I like to share my trading insights with you. But on Tuesdays, I bring you to work. And I've got some things I want to share with you today, but they really aren't stocks in themselves. You know, today I was expecting a lot of things to happen on the market. I think I was expecting it because the first time Trump came into office, the market went into jubilee. For days, there was confetti and money falling out of the sky, but there was none of that today. Now, we did have hot stocks to play. We were taking gains. It was like any other day, but nothing really caught my attention I wanted to share with you. So I figured what I'd do today is to talk to you about Pennybois, which is where I spend my time every single day from bell to bell. Literally, from 9:30 to 4 o'clock, I am over here on this page trading with my team members and anybody who shows up from the general public. At any given time, we've got 50 to 200 people over here trading. And you could be one of them. All you got to do is click the link that I got down below. It says this is the Pennybois link. Click that. That'll take you to Discord. If you don't have a Discord account, don't get worried about it. Just give them an email, choose a password, choose a username. You got an account. They will automatically direct you to our page. Over here is our menu. Find the free members page. Yours won't be as big as mine. Click that free members page and it'll bring you into where we're at. And there's always somebody over here. Day and night. There's always people in here, but especially in the morning. From 4 in the morning till the end of the day, there's a lot of people in here trading all the time. Now, me personally, I don't show up over here really till about 9:15. From 7:20 to 9:15, I'm posting news. I am posting it here at Pennybois. I post it at News by Jersey. Where is that? Right there, News by Jersey. Jersey used to be my old name. It's my initials, John Eric Zidar. I post pre-market news there and over at Twitter as much as I can get out before I have to start trading. Then I run over here and we start looking at hot stocks. But truly, everybody's been looking at hot stocks. They've been bringing in stocks early in the morning. Some people are posting charts. Others are just telling you about stocks you should be considering. I'm bringing in scanners. I'm showing you the biggest percentage gainers. I'm showing you the biggest volume gainers. So we've got lots of information over here. Now, what we do here, folks, is try to make money while you're here. So when you come visit us, when you leave, hopefully not only are you making money, but you're also gaining an education. We want to teach you what we are doing here. Nobody over here is licensed. We cannot tell you when to get into a trade or when to get out. Nobody can over here. But that doesn't mean we can't show you. And that's what we're doing. We're teaching you by showing you how we get our chart set up, where we find our entries, where we find our exits so that you can do it yourself. And there's lots of plays you can get from us, but you can do this anytime you want, wherever you want, without us. So this is the basic strategy here, folks. When you find a hot chart, the first thing you want to do is get some supports and resistances on it. Those are these horizontal straight lines. Now, I draw them, you draw them, everybody draws them. There's no programs to do this, so don't go looking for it. If we can invent one, we're going to get rich. What supports and resistances are points on the chart where the price changes direction. It comes up to $3, hits its head, turns around and falls. Or it comes down, hits $3 and bounces up. Well, that $3 point is a bounce zone. So we draw a line on it and we call it a support when the price is on top of it and a resistance when the price is underneath it. Now you can think of them as speed bumps, and that's how we use them. When the price is approaching a speed bump, it hits its head, like right there, and then comes back. So we don't get in underneath a support. We wait for it to get on top of it. Once it gets over the speed bump, chances are it's going to hit the gas and just drive normal till the next speed bump. Then it's going to slow down. It could pull back. So we get in just over top where these blue arrows are, and we get out underneath the next support up. Now, if you're thinking, but what if it's running? Why would I want to get out all the way? Well, you don't have to. It's free to sell. So take some gains. And that's the strategy here, folks. When we set up our plays, as I was showing you, we know exactly where we are getting in and where we're going to get out before we get in. Let's say the price is down here, right? Let me open up this chart. All right, let's say that we are right down here. I'm going to put an order in for a buy up here, above this support, a little bit above it. I don't want to be on top of it because that's where the price bounces. So I want to be above it where it's going to have its foot on the gas pedal. Then I've got my target price. I know what price that is. So now I've got 2 orders. Now I need one more order, a stop loss. We need to put a safety net underneath where we got in. So if it falls underneath that support, chances are it could continue to fall. We want to get out. Whether we're coughing in the bathroom, have our head turned, whatever, or just don't move fast enough, we put in an order so it automatically does it for us. So now I've got 3 orders. I have a buy order, sell for a profit, and a sell for a loss, my stop loss. All 3 of those go in at the same time. That is called a bracket order or an OCO, which is one cancels the other. If you hit your target price and sell, the stop loss cancels. Or if you hit your stop loss, the target price cancels. But all 3 go in at the same time. And the reason we do that is to eliminate any rash decisions in the heat of the moment. People are saying, should I sell now? How long should I hold? Bad time to be making a decision while the stock is bouncing around and you're holding money in your hands. So our strategy is to take gains as they're given. We're looking for probable moves. We see a stock taking off. That grabs our attention. We're not worried about how high it's going to go, but we want that piece in the middle, that chunk, that meat, that probable move getting from the start to the finish. We want the middle. And that's what we take here by placing our orders in there. So if you have a stock that's running very, very hard, you don't have to sell 100% at the first target, but sell something. Don't let money go by. This is how people get stuck. We have no idea when the stock is going to stop rising and start falling. And stocks normally fall twice as fast as they rise. So it's smarter to take your gains going up the rungs of the ladder. If she falls up here, you've already got 3 pocketfuls of money that you've taken before she decided to drop. So this is the secret, controlling the risk. Risk management is number 1, folks. It is not about making money. It's about keeping the money you've made. Warren Buffett says his number 1 rule is do not lose money. His second rule, it's a lot like the first. Don't forget rule number 1. Don't lose any money. Look, think of it this way, folks. You're a soldier. Your objective is to eliminate the enemy. But that is not the most important thing. The most important thing, your priority is to stay alive, right? You don't stay alive, you don't stay in good shape. What are you going to be able to do to meet your objective? If you lose your money, how are you going to make money? Protect your money. Risk management is number 1. Don't be trading without stop losses, folks. It is a friend you're going to love to hate. It's going to save your butt many, many times. So that's the basic strategy. Now, I go out and start looking for hot stocks as soon as the bell rings. But we really shouldn't be playing anything for 5 to 10 minutes after the bell. Everybody feels antsy, like it's a race, like they need to jump into something. No, calm down. Watch the market like watching traffic. Look to the left, look to the right. See what's coming, see what's going, and time getting into traffic. This is the best way to do it. Don't just rush in because you see something going on pre-market. Pre-market and the bell are 2 totally separate periods, I assure you. If you get into a stock pre-market, you should be getting out pre-market because there's going to be a drastic change at the bell one way or the other. So everybody is starting to bring in stocks right now. I am going to go looking for stocks in 3 primary places. Now, I have a very long list of places I can look for stocks. But my 3 primary places that I go is my scanner over at Thinkorswim, which we're going to go look at here in a minute. The second one is my favorite news site, Stock Titan. They have more than just news, though. They've got a momentum scanner up here under tools. right there. This momentum scanner is using AI and weighing up the amount of impact of news on the charts. And this is the one I use primarily. I do not follow news. I look at the news before the market. I look at the news after the market. But during the day, I'm so bloody busy playing technicals on charts, I never know what is going on. So this momentum scanner is really, really great. I pop over here all day long. I take pictures of it and I post these over at Pennybois. So you're keeping up with me as well. And I am looking at all of the green. If it's red, it means it's falling. If it's green, it's going up. It tells you how many times it has been alerted. Now this is after hours. CDIO has been alerted 25 times. RIDE, R-I-D-E, has been alerted 4 times. Now through the day, I can find the big green bars up here have been alerted 120 times. And yeah, you can see they've been running all day. But if you come down here to one that's just had 6, 10, or 20 alerts, it's just starting its run, right? So it's smart to start on this side looking at stocks and not this side. Guaranteed these bad boys have been running. So this is one place I do get hot stocks all through the day. I also use New York Stock Exchange Trading Halts page. It's the only page I use actually. And this tells me whenever a stock is halted for volatility. It's too hot, too much volume, price is moving too fast. Maybe up, maybe down. This tells you when it's halted. And stocks that are halted aren't halted for any specific period of time. It's not like they're halted for 3 minutes and come back. Maybe 3 minutes, maybe 10 minutes. We never know. You just never know. So when we see a halt, the first thing we do is go look at the chart because it is halted. And we will see if everything was halted up. If all the lines are pointing up, all the oscillators, all the MAs, the volume is coming in. If it's a hot chart, most brokers will let you put in an order while it's halted. So let's say the stock price is $1. I'm going to come in at like $1.20. I'm going to come in real high because after a halt, it can shoot really fast. And if I put in $1.05, it could shoot past me so quick. The first bid is at $1.16 and it doesn't even see me. I'm out of the game. But if I come in at $1.20 and it does hit $1.05, I'll get the $1.05. I get the better price. So it just makes sense to be up higher and not miss the trade I'm trying to get into because these halts, when they come out of halt, can jump huge runs. So what we normally do instead of choosing a target price is we use a trailing stop loss. It is just like a stop loss. It is underneath you a percentage or a certain amount that you are willing to lose, 10% or whatever. But as the price starts to rise, the trailing stop loss rises with you. So that 10% just follows behind you like a trailer. And if the price starts to fall, then your trailing stop loss locks and the price starts getting closer. But if you don't hit 10% and start going back up, it starts following you again. And when it finally comes down and hits that trailing stop loss, then it sells. Then you've got your profit and you didn't even have to worry about it. And that's how we like to play those halts. And if I need, I've always got my otcmarkets.com website, which is where I do virtually all of my initial research and due diligence because they carry every single stock on the market. They've got gaps in some of their information, but it's a great place to start. So I use this because the news site does not carry filings. This site carries filings. And every now and then people want to know, why is this stock running? What's got this thing on fire? And I'll run over here and I'll run over to Stock Titans real quick to see if there's any filings or any news, and we'll have that information. Now, while we're trading, we have new people coming in all through the day. They just pop in and we never know how long they've been here. And one of the most common questions we get is, what is hot to play right now? Well, we've been posting hot stocks all day long. Matter of fact, I use a key word. When I get a hot stock, I will go to the chart and immediately put in supports and resistances because people are going to be setting up their trades using these. They're going to get in over top of one of these horizontal lines and get out underneath the next one. And for every 1,000 shares you own, you're going to make $10 for every penny it moves. So that's how you make your money. At the end of the day, you've played 6, 7, 10, 20 of these small plays, which took you 5 to 10 minutes each. You made 60, 180, 90. You made all these pots like you were playing poker, right? You win a hand, you didn't count your money. You just grabbed the money from the center of the table and pull it in. Ante up and play the next one. And that's all we're doing here. We set up our trades ahead of these running stocks and let them run into us like a bear running into our trap. And then we've got it. It's got to either go up to get out or go down to get out. And we've already got all of our trades in, so we don't have to make any decisions. These are the sort of trades we're doing over here all day long. So once I put my supports and resistances on a chart, I want it to be found easily. And it can get lost in 8 hours worth of posting. So what I do is I've got a keyword right there. Find it. Findit as one word. If you put that up here in this search bar right here and search, it brings up all of the charts that I have done. Well, not just today. It just goes back further and further and further. You can see every single chart. But if you just want to see the stocks we looked at today, you can just come here. And every single chart that is pulled up already has supports and resistances on it. So we sift through these at the end of the day because a lot of stocks that have huge runs in the morning have pullbacks to their 20 or their 50, and then they'll bounce back up, and then they get a second big blast. So we like to sift through the embers. Those are your embers, and that's the way to find it, by using the keyword find it. So all day long, we are going to be posting charts. First, they'll be naked. If there's any interest, I'm going to go out and get some supports and resistances. Other people are putting up charts. We have live streaming events from our coaches. Folks, we got coaches over here. If you want to learn how to trade options, you ain't got a clue how to trade options. You've always wanted to do it, but haven't got a clue how to go about learning. It just looks too overwhelming. Right here, this is the man, Ethan. We got 2 people over here. I think Mad Maverick is the other one. These are 2 guys that trade options. Some trade options quick, others trade options longer base. They can teach you everything you need to know. And you can hire them for $40 a month and get personal training one-on-one, folks. Think about that. You can't get that in school, at college. Where do you go online where you feel you can trust giving anybody any money? And $40. Come on, folks, let's be honest. I lose more than $40 in most of my trades when I lose something. So this is an investment in yourself, and it doesn't cost much. And to think of the gains, the education that you're going to get, I think it's outstanding. Well, we have live streaming events over here on the free members page. You can just plug in and watch somebody else's charting. That in itself is worth gold. To see what they do. They'll explain what they're doing. They'll show you what they're doing. You can record what they're doing and learn from it later. And then I myself am posting all sorts of information through the day. I find information on how to trade certain stocks. Let's see if I can find one here for you. Dun, 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 dun. Anybody with a green name, like Stock Wizard, the Porterhouse, these are all team members. They are here to help, to teach. If you have a question, come on over. That's what we're here for. Ask your question. If I can't answer it, I'll call someone. I'll just beckon them over to this page because we got lots of pages. I'll call them over from wherever they're at, and they'll be able to answer your question. So we would love to have you over here. I would love to have you over here. Show you what we're doing. You can learn a quick way to trade scalping so you can make money any day of the week. Remember, folks, even a down market that's falling has bounces on the chart as it's falling. All we're doing is playing that up bounce before it goes back down. Up bounce. So it doesn't matter if it's an uptrend or a downtrend. There is always a market for scalping. All right, I think I've given you enough information about what we do over here at Pennybois. So why don't we jump on over to my Thinkorswim, and I want to share a watch list with you that I think has a lot of value. Not only because it has potential to make us money, but because I did all the work. And I'm just giving this list to you for free. You're probably going to have to type it up. I don't know any other way to do it, but at least you're going to have the information. Welcome to my playground. That's what Thinkorswim is to me. This is my free trading platform I got from Schwab, and God, do I have a lot of fun with it. I love looking at charts, folks, and that's a good thing because I look at literally thousands of charts a day. I am not exaggerating. That is the truth. And what I'm doing right now is sharing a watch list I put together looking at a couple thousand charts on Saturday. This is a particular watch list. It is one I put together to meet a strategy that I am employing. I think it has a lot of potential to make me a lot of money. It could make you a lot of money if you want to use it. But the big benefit here is that watch list. I've already done all the homework. I've already gone through all the charts. I've already put this together. So let me tell you what the watch list is first, and then I'll tell you why I put it together. The watch list are stocks under $5 matched up to their warrants. First off, what's a warrant? All right, let's get this out of the way. Don't let anything else I say confuse you. A warrant is a stock. Like any other stock, you trade it. Get in, get out whenever you want, take your gains. Voila, no problem. But warrants, like other types of stocks, come with extra benefits if you want to exercise them. Warrants are promissory notes. They're coupons. They allow you the right to buy a share of the company's stock at a guaranteed super low price that will never change anytime you want in the next 3 to 5 years, something like that. Let me give you an example. Let's say a company has warrants. The price of the stock is 90 cents. The warrants go live. You can use them as soon as the price hits $1. When it hits $1, the warrant gives you the right to buy a share at $1.25. Well, that's no big deal. It's $1. Who cares? Yeah. Right now it's no big deal. But remember, these are for the future. Anytime up to 3 to 5 years from now, you can use it. Well, maybe 3 years from now, the stock is at $30. You can take that warrant and $1.25 and buy a $30 share. You just made yourself a ton of profit. And you can do that for every single warrant that you own. This is how Warren Buffett makes millions of dollars. Whenever he invests into a company, he asks for a lot of warrants for free. It doesn't cost the company anything. And since he's investing into the company, he believes that stock is going to go up. When the stock goes up, the warrant goes up. And that's why we're interested in warrants. When I have been trading over at Pennybois every day from bell to bell for the last 3 to 4 months, I have taken notice that the hottest stocks we're playing are stocks between $2 and $4. They are going between 100 and 2,600% in a single day, which is great. That's a lot of money to be made. But these stocks are all at different prices, and not everybody has that sort of money to jump into those sort of stocks. And you can't buy as many shares as you really would like to buy. Well, warrants are really cheap. Warrants are normally 8 to 10% the price of the stock. So if the stock is $1, the warrant should be at about 8 to 10 cents. But right now, a lot of warrants are down at 1, 2, 3% the price of the stock. So what I did was put this list together of all these stocks that are at that point, either just above or just below that $2 to $4 zone, and match them with the warrants. Then I put it with the volume at the top. And I'm going to watch the volume for everything. Now, it's all mixed up now. My warrants are not underneath my stock. But that's okay. I'm looking for anything that moves. And chances are, if I see a stock start to move, the warrant's going to start to move. We are seeing warrants at like 2, 3 cents jump in a day or two up to 30 cents, 50 cents. Folks, I got into a stock a little while ago, a warrant, and it was 2 cents a share. So I bought 1,000 shares for $20. That's not a big investment, and I've got 1,000 shares. The stock didn't move, my warrant didn't move because the stock didn't move. I'm waiting for it to have its day. Well, every other day or so, I buy another 1,000 shares for $20, $22, $24. Well, I am just under $200, and I've got 10,000 shares. Now that is all I'm going to buy of that. You don't want to overload on warrants because when you go to sell, there may be a liquidity problem and you may not be able to sell everything you've got if you've overloaded on them. So 10,000 is a good ceiling. Now with 10,000 shares, every penny that the warrant moves, I'm going to make $100. I invested, let's call it $200 for 10,000 shares, right? If this thing goes to 30 cents, I just got $3,000 minus my $200 investment. I just made $2,800 in a day or two. So what I am doing is I am finding stocks that are starting to move on the charts, starting to climb, getting volume, breaking through the 200s, looking like they're going to that $2 to $4 range, could be hot, and I'm putting a little bit of money on them. Right now I've got 5 warrants, I think it is, that I've just been picking up $20, $30 worth here and there, no big investments, and just adding to them. And I will not go over 10,000 on any one of them. This is what I'm going to use this list for. And I'm not being greedy, folks. I am not looking for the biggest absolute gain. I'm just looking for a stock that is going to be hot between $2 and $4 that is going to start moving so that the warrant can move. Now, if you buy 1,000 shares at 2 cents for $20 and it just goes up to 10 cents, you've just made yourself $80 on a $20 investment. You made 400% profit. If you buy $100 worth and it goes up to 10 cents, you made yourself $900, going from 2 cents to 10 cents. Now, let me explain to you about the ask and the bid on these. Warrants are a little different than stock. They don't have constant volume coming in, liquidity, water just coming out of a faucet. It's off and on, off and on. And when it's off and on like that, you get a big spread in the ask and the bid. The bid right now is at 0.008 and the ask is at 1.8. So there's like a whole penny difference. This is ridiculous. This is a giant spread between the two. So what normally ends up happening is somebody will actually pay that ridiculous bid. You may be at 2 cents and the ask is at 10 cents, 500% over your head, and somebody buys 20 shares at 10 cents. Well, that's no big expense, right? So he doesn't care that he paid 500% over. But now you, as far as you can tell, have got a 500% gain and are ready to sell. Time out, halt, stop, wait. Before you do anything, always look at your ask and your bid. Make sure the bid changed. Normally, when the price changes on a warrant, the first time, the bid doesn't move. So if the bid was 2 cents, the ask was 10 cents, the price jumped from 2 to 10 cents, the bid's still 2 cents. The ask is still 10 cents. Nothing changed but the price. So if you were in a hurry and just went in there and sold and didn't read everything, you'd get your money back. Exactly what you put in, you'd get back and go, what the heck happened there? That's what happened. Normally it takes 2 or 3 bids over the 2 cents, over the bid, to get it to start climbing. So you'll find that it finds somewhere in the middle. That first one took it to 10 cents. The second one will bring it down to 6, 7 cents, somewhere there. And you could sell there if you wanted to sell there. Or you could see if she climbs some more. But again, no difference than stocks. When you see your warrant start to run, sell something, folks. There is no telling when she's going to stop and drop. So don't get greedy. Sell some of what you have as she's rising. Put gains in your pocket. Get used to doing that and just catching these hot stocks with warrants. So I'm going to zoom in on this for you now. I'm going to make this nice and big. There we go. And I am going to scroll it for you so that you can see what we got here. Now, of course, you can pause this anytime you want and take pictures. Do I have this in order? All right. So now they're in alphabetical order. Nice, easy peasy to read. Now, I am excited about this, folks. I was doing this about 1.5 years ago, maybe 2 years, when SPACs were very, very hot. And then SPACs died off and, well, warrants just haven't been anything for a really long time until here recently. until these small cap stocks have been running hard, dragging those warrants along with them like a caboose, grabbing rocks and filling that bucket until it's overloaded. So I think, folks, if you do some due diligence, you'll see what I have seen, that companies that are running from $2 to $4 have warrants that are running, if they have warrants, and that's where the bigger gains are. Do your due diligence. You'll see I'm not kidding. So hopefully I've shared some good information with you here. I know you're going to have to put a little bit of effort into getting all of it out, but you got to do some of the work. I can't do it all, right? Remember, folks, the more you know, the more you're going to grow. See ya.